Welcome, crypto fam, to the #1 daily Bitcoin pod. In today's show, I'll be breaking down the latest Bitcoin technical analysis, as well as all the breaking news. Russian companies are using Bitcoin to evade Western sanctions, according to their finance minister, who recently shared that in an interview. Also, Max Keiser says Bitcoin, MicroStrategy, and El Salvador, plus the other sovereigns, are about to take 200 to 300 trillion of the US dollar-based assets and transfer that into Bitcoin, sending the price action at 2.2 million per coin. We'll also be discussing breaking news. KURL Technology launches a Bitcoin treasury with a $21 million purchase, as well as Hong Kong stablecoins bill advances to the Legislative Council, as well as Japan's Prime Minister says not ready to talk about the Bitcoin National Reserve. I'll be sharing with you this report, as well as Binance Bitcoin reserves hit January levels months before Bitcoin jumped by 90%, as well as breaking news. 6 Bitcoin funds are set to debut in Israel following regulatory approval next week. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. But anyways, fam, if you're new to the channel, important to smash the likes, go ahead, subscribe. Half of you watching are not subscribed. You know what to do. Then also hit the bell icon, turn on all notifications. Today is pod episode 1860. I'm your host, JV. It's December 26, 2024. What do we got? Another 5 days left before we put a bow on the entire year. It's crazy to say that, but 2025 is literally right around the corner. Let's kick it off with our market watch as we do each and every day. You can see Coin 360 on your screen. Bitcoin just above 96,000 at the time of the live stream, down 3.4% on the day. XRP is down 6%, ETH down 4%, Solana down 5%, just correction across the board. And checking out CoinMarketCap.com. The current crypto market cap sits at 3.32 trillion. Bitcoin market cap just shy of 1.9 trillion. We got roughly 126 billion worth of volume in the past 24 hours, with the Bitcoin dominance currently back on the rise, 57.2%. Ether dominance back on the decline, all the way down to 12.1%. And checking out top 100 crypto gainers past 24 hours, we got Bidget leading the pack, up a whopping 30%, followed by Sam Bankman-Fried's FTT coin, the native token of the FTX exchange, up 17% on the day, followed by OKB and Pudgy Penguins. The majority of the alts, however, as you can see, are correcting and in the red. Which alts, if any, are you bullish on for the bull? Holla. And checking out Crypto Bubbles, we get a visual perspective on the day, and survey says literally everything besides BGB and FTT correcting and in the red. But zooming out on the monthly to get a broader perspective, now we're talking, it's roughly split even, 50% in the green, 50% in the red. And checking it out, the Crypto Greed and Fear Index today, we rose to a 79 in extreme greed. Yesterday, 73. Last week, a 75. And last month, a 79 in extreme greed. And checking out time chain calendar, we have 173,526 blocks until the next halving of 2028. We're currently on block number 876,474. And you currently exchange one US monopoly dollar for 1,043 sats. So stack them sats and let's go. Here's the next headline, family. It reads, Bitcoin bulls are back. The Bitcoin derivatives data hints at a rally to 105. That's right. Bitcoin gained 6.5% since the 92 low, December 23rd, but it failed to surpass 98. That's some bullshit. I saw it surpass 99 the other day, but I digress. 108.3 is the current all-time high, which we achieved maybe last week. Bitcoin derivatives maintained a neutral bullish stance, suggesting that the sharp price volatility did not significantly impact the market sentiment. This positions support with the likelihood of a sustainable rally above 105. The Bitcoin futures monthly contracts. That's right. We almost hit 100,000 on our pump watch yesterday. We were so close, only a few $100s away. So it was a nice little Christmas pump. It really started on Christmas Eve and it maintained throughout Christmas. And then today we're correcting. But anyways, typically premiums ranging from 5 to 10% are considered neutral as sellers factor in the extended settlement period when setting the prices. The Bitcoin put options are trading at a 2% discount compared to the buy options, consistent with the trend over the past 2 weeks, and the whales and market makers are anticipating a potential correction. This indicator usually exceeds 6%, reflecting the premium on the put options. The recent recovery in traditional financial markets also contributed to the Bitcoin rise above 98,000 as the S&P index erased most the monthly losses on December 24th. That was Christmas Eve. And additionally, the U.S. 10-year Treasury yield climbed 4.5% from 4.25% 2 weeks earlier, suggesting investors are demanding the higher returns to hold the government debt. Bitcoin's upside remains constrained as investors worry about the risk of global economic stagnation. It is challenging to predict the full impact on the stock markets and real estate assets under such conditions, but currently Bitcoin's correlation with the S&P is relatively high at 64%. Now, the Bitcoin long to short margin ratio over at OKX is currently at a 25x in favor of the long positions. Let's go Bulls. Historically, excessive confidence drives this ratio above 40x, while levels below 5x favor the longs are generally considered bearish. Both Bitcoin derivatives and margin markets indicate bullish momentum despite record outflows from BlackRock's iShares Bitcoin Trust on December 24th. And moreover, the resilience shown during the retest of 92.5 on December 23rd, reinforcing optimism about Bitcoin's potential to reach 105 and beyond. And again, 108 is the current price discovery. And before I pull up some of the live charts, here's some other breaking news and updates from Max Keiser. This just in, Russian companies are using Bitcoin to evade Western sanctions, according to the finance minister, who just revealed in an interview. Now, Max wrote, Bitcoin, MicroStrategy, El Salvador, plus the other sovereigns are about to take $200 to $300 trillion of US dollar-based assets and transfer that into Bitcoin, sending the price parabolic to 2.2 million per coin. Can you say 2.2 million in play? Let's send it. And in other updates, Director of National Intelligence Tulsi Gabbard says there's value in the U.S. having its own strategic Bitcoin reserve. Max responded, as I outlined in 2018, the global hash war will replace any notions of banning Bitcoin. He also recently shared a rude awakening for Trump. He can't control Bitcoin. When the U.S. buys 1 million Bitcoin, it will benefit countries with the least debt and the cheapest energy, primarily Russia. It'll hurt countries with the most debt, like the United States and China. Imagine if Russia did a good old sailor put. And he also shared Trump can't wave a magic Bitcoin wand and make the debt go away by buying the million Bitcoin. And I suspect he'll get sold on a package of DeFi shitcoin garbage and relive the failed Project Warp Speed disaster, but with the Treasury. And this was off the back of the news. Trump is being handed a ticking time bomb. Janet Yellen has left his administration with $7 trillion of debt to refinance in 2025 alone. And one more update: to stay alive, the U.S. will take a massive hit on its U.S. dollar reserves. Fiat money debt imperialists die under the global Bitcoin standard. Russia, because it has virtually no debt, excessive cheap energy, and it's the world's biggest commodity producer, is best position. So there you have it. Those are the updates from the high priest. And now let's pull up some of the live charts and check out where the price action is likely to take us next. Shout out Orlando Kelly. I greatly appreciate you supporting the stream by becoming a member of the Huddle Gang here on the YouTube channel. Respect. And shout out to all the members holding it down. Much appreciate you. But here you're looking at the 1 hour chart. You do see a lot of targets on your screen. The most bullish target on the 1 hour right now is 1076. And zooming out from the 1 hour, here's the 4 hour, and we're looking at Coinbase via TradingView right now, if you're wondering which exchange. As every exchange, the prices are slightly different. We also have the 1076 target on the 4 hour chart. And we also have the rising wedgie, the only type of wedgie I enjoy. And zooming out for the 1 day chart, also the rising wedgie. So as you can see, bullish overall. We did get that big correction, earlier in the week, but nonetheless, still very bullish momentum in the markets, considering where we just were 30, 60, 90 days ago, making massive strides. Zooming out on the weekly, you can see we finally had a corrective weekly candle close on Sunday. But prior to that, we had like 6 green consecutive weekly closes since the Trump victory as far as the election day. I believe that was November 5th. And we still have the sexy cup and handle target sitting pretty at 124 Gs. And taking a quick look at the monthly, massive green candle close for Moonvember. And we got 5 days left to finish off the month of December and put a bow for the year heading into 2025. Where do you think that monthly close and yearly close shall be? Holla at your boy. And again, welcome everyone just joining us on the live stream. What's cracking? Let's move on to our next story of the day. This is actually one of the big stories. Headline is KULR Technology launches a Bitcoin treasury with a $21 million purchase. You know what that means? That's a blackjack, baby. An ace and a 10. Got to dig it. New York Stock Exchange listed KULR Tech Group has announced the acquisition of 217 of the biddies for approximately 21 milli, marking the launch of the Bitcoin Treasury. And according to the December 26th announcement today, the purchase was made at an average price of 96,500 per Bitcoin. KURL said the acquisition is the first of several planned purchases as a part of the broader strategy to allocate up to 90% of its surplus cash into Bitcoin. Why so bearish? You got to go 99.9% if you're all in, just saying. The company selected Coinbase Prime to provide the custody and self-custodial wallet service for its Bitcoin. And I'm curious, how many of you use Coinbase Prime? It's a custodian service and also for business accounts and such. Let me know. I'm curious. In the comments, KURL CEO Michael Moe said MicroStrategy's Bitcoin approach inspired the move. Following the Sailor put, He says he, Mikey Saylor, calls Bitcoin digital energy, which really resonated with our mission because we're an energy management company for batteries. And space applications are our core. Very interesting. KURL conducted a survey to gauge shareholder support for the strategy, and it was very positive. Quoting them here, we received an overwhelming yes. Here we are buying our first block of Bitcoin entering into the future of money. We believe that Bitcoin is the future of money. Amen. KULR is among several companies that unveiled their Bitcoin treasury strategies this month of December, following Bitcoin's recent milestone, surpassing the 100,000 mark. December 23rd, we had Canadian firm Matador Tech, which I shared on the other stream the other day, disclosed the addition of Bitcoin to the balance sheet as part of the long-term preservation capital strategy. The company's board approved the initial purchase of $4.5 million worth of the biddy with plans for further acquisitions. Another firm recently added digital assets to the treasury. That's biopharmaceutical company Quantum Biopharma. They announced the purchase of $1 million of Bitcoin. And Japanese investment firm Metaplanet also made its largest ever Bitcoin acquisition over the past few days. You start to notice the trend. They just bought 620 Bitcoin. This Bitcoin treasury strategy was pioneered, of course, by MicroStrategy, the first publicly traded company to put the biddy on the balance sheet back in 2020. MicroStrategy now holds 444,000 plus Bitcoin in its treasury, and it's seeking shareholder approval to expand their purchases and following through with the 21-21 plan. That's a blackjack times 2, baby. MicroStrategy's goal is to purchase an additional 42 billion worth of the biddy in the coming years. That's crazy. We envision that the future of a dynamic corporation is based on 3 pillars: superintelligence through AI, automated workforce through robotics, and future of money through BTC, said the KULR CEO. I believe the whole industry is still at the very early stage of figuring out how to tie all them together. And there you go, crypto bros. All right, here's the latest from Hong Kong. Shout out to my Hong Kong Bitcoin dons. Hong Kong stablecoins bill advances the legislative council. And I'm curious, how many of you have ever been to the Hong Kong? I've been there on my visa run when I was living in China. I spent a few days out there. It's actually a pretty cool location. They speak Cantonese. In the mainland, it's only Mandarin. And I respect the Cantonese because I studied traditional Kung Fu And my Kung Fu teacher and grandmaster used Cantonese as well. So it felt like home for me. And it kind of reminded me of like New York City on steroids. It's actually a pretty cool place to visit, Hong Kong, by the way. And the dumplings were the best dumplings I've ever had in my life. So I got to recommend it. But anyways, Hong Kong's proposed stablecoins bill has entered the Legislative Council, moving the region closer to forming a comprehensive regulatory regime for the stablecoins. December 6th, the Hong Kong government published the bill in the Special Administrative Region Gazette, moving it closer to becoming law. December 18th, the bill was forwarded to the Legislative Council of Hong Kong for the first reading, as outlined right here. Before the bill is signed into law, it must first go through 3 readings, which comprise of a series of debates, examinations, and potential amendments. When the bill passes the 3rd reading, it'll be forwarded to the region's chief executive, who can finally sign that mofo into law. Now, according to the law firm King & Wood Mallesons, the stablecoins bill has 3 key components. They include stablecoin issuer, licensing, and requirements, specified stablecoin offering, and marketing restrictions with the broader consumer protections. If the bill is signed into law, issuers of the stablecoins in Hong Kong must obtain a license from the Hong Kong Monetary Authority, the region's central bank. Issuers must comply with comprehensive requirements to obtain a license. The regulator would evaluate the issuer and its controllers, resources, stablecoins, reserve assets, and the mechanism stabilizing its value. Only regulated entities and platforms will be allowed to offer stablecoins in Hong Kong or to market them to the public. The bill provides protections for consumers that affect the various market participants, including issuers and distributors. And if the bill is enacted, Hong Kong may witness a shift in stablecoin use similar to that in Europe when the markets and the crypto asset regulations came into force. December 18th, research firm Kaiko and Netherlands-based crypto exchange Bitvavo reported the introduction of MICA significantly shifting to the stablecoin landscape in the region. And while issuers like Tether discontinued its Europe-backed stablecoin, compliant issuers have thrived. By November, MICA compliant stables captured most of the market, with Circle, Societe Generale, and Banking Circle stablecoins holding 91% of the market share, and that was by late 2024. So there you go. We discussed the latest from Hong Kong. Now here's an update from the Japanese Prime Minister. That's right. According to this latest report, Japan's prime minister said the government lacks enough info about the U.S. and other country plans for a Bitcoin strategic reserve to determine whether Japan should implement one. According to the December 26th report today from the local media outlet CoinPost, Prime Minister Shigeru Ishiba, I wonder if he's a sheep hodler, said he doesn't have enough understanding of the movements by countries like the U.S. and others regarding adopting Bitcoin reserves. Well, you need to go hang out with Bukele. Come join us in Bitcoin country in a couple of weeks. It is difficult for the government to express its views, he said. That's interesting. At least he's honest. The response came after a question from Satoshi Hamada, a member of the House of Counselors. There's a Satoshi in Japan. Any relation to Nakamoto? Interesting. On Japan's movement of introducing Bitcoin reserves that the U.S. and other countries are proceeding with, Satoshi said, I think Japan should follow the example of the U.S. and consider turning some of its foreign exchange reserves into crypto assets, such as Bitcoin. I couldn't agree more with Satoshi. And here you have it. Satoshi lives. We finally identified the guy. Whether that's Nakamoto is a whole new question, but apparently there's quite a few Satoshis out there. Ishiba said the crypto assets do not fall under the foreign exchange category. Jack Mallers, founder and CEO of Strike, said Trump will likely issue the executive order on his first day, Jan 20th, as president to designate Bitcoin as a U.S. reserve asset. And more recently, Congressman Iros proposed a bill in Brazil to establish the sovereign federal Bitcoin reserve. You like those R's rolling off the tongue? I've been practicing. The bill was introduced November 25th and seeks the creation of a sovereign strategic Bitcoin reserve known as the RESBIT. And on September 8th, Ripple CEO Garlinghouse said it anticipates a strong demand for the Japanese yen stablecoin. Quoting Garlinghouse here, people will want to hold the yen stables, and I think that is only a matter of time. Now, Garlinghouse said that while he finds Japan to be a conservative market in some ways, he also sees it as really healthy in other respects. He said that compared to the other countries, Japan has leaned in on offering regulatory clarity and legislation on the stables and cryptos. And there you have it, yo. So there you have it coming directly from Japan. Let me tell you something. Konnichiwa. But anyways, let's continue with the news. Next story of the day. Let's discuss supply shock. A very limited amount of Bitcoin to go around right now. Headline reads, Binance Bitcoin reserves hit January levels months before the biddy jumped by 90%. And then we'll dive into the feature story of the 6 Bitcoin funds set to debut in Israel next week. So yeah, Bitcoin reserves on Binance, the world's largest exchange, has dropped to levels not seen since January of this year, 2 months before the biddy price skyrocketed 90% in March. That's right. If Bitcoin follows the same pattern with the current price of 98.6, it would mean a $187,000 500 price in a matter of months. Send it. The Binance Bitcoin reserves recently dipped below 570,000 Bitcoin, the lowest level since January, according to CryptoQuant. And when the exchange reserves decline, this typically signals that the investors are moving the biddy into the cold storage and are bullish about its long-term price prospects. Binance's reserves dropped to a similar level in January. And 2 months later, March 13th, Bitcoin surged to 73 Gs, baby, marking the all-time high. And when periods of withdrawals occur, it often is a sign of the positive momentum building in the market. Now, Bitcoin dominance currently stands at 58.4%, just below the critical 60% level, and some analysts say 60% level could signal the wider rotation towards the other cryptos. August 18th, the Cryptoverse founder said he believed Bitcoin will make that final move towards 60% no later than December, which it ended up tapping just 2 months later, October 30th. Meanwhile, Bitcoin struggled to hold above the psychological level of 100 Gs since first breaking it December 4th. Get your facts straight, Cointelegraph. Bitcoin's price has been trading under 100,000 mark since December 19th after reaching a new high of 108.3, which is the current price discovery mode achieved December 17th. And according to the BitGet research analyst Ryan Lee, Bitcoin's price may exceed 105 Gs, baby, once liquidity returns after the Christmas holidays. Bitcoin is currently down on a downtrend, a typical symptom of the holiday illiquidity, posting them here, quoting them, post-Christmas market activity typically picks up again with the funds expected to actively position for the sector that might benefit from the Trump upcoming inauguration. The expected trading range for the biddy this week, 94 to 105. And there you have it, yo. Now for our feature story of the day. 6 Bitcoin funds are set to debut in Israel following regulatory approval next week. So let's break this down as the global hash wars continue, fam. 6 Bitcoin tracking funds are set to launch in Israel next week following the recent approval from the Israel Securities Authority. And according to the local media reports, the funds will mirror Bitcoin's price movements through various indexes and strategies that will be available for purchase at the banks and investment firms officially starting December 31st, meaning only 5 days away. Some of the new funds will track the ETFs launch in the US, such as BlackRock's iBit. One of the funds will actively manage to beat the crypto's performance. Will be actively managed to beat, that says. Let me rephrase that. And as of Christmas, yesterday, the combined market cap of all the Bitcoin ETFs is currently $143 billion. Now, that's mind-boggling because the spot ETFs did not go live in the U.S. until January 11th. So in less than a year, they have attained $143 billion of combined market cap, which is mind-boggling. It already surpassed the market cap of the ETFs in gold, and gold has been around in ETFs for 19 years. So Bitcoin just achieved in less than 1 year what took gold 19 years to achieve. And behind the funds are the mutual fund managers in Israel, which is Phoenix Investment, IBI Kesem, Mettav, Moore, Ialon, and Migdal. Management fees will range from 0.25% to 1.5% to back to 0.25%. Now, the green light from the regulators was granted just weeks after 2 years of requests from asset managers. The funds will allow the local investors to get exposure to the biddy via Israel's fiat currency, the shekel. And initially, buy and sell orders will be executed once a day, reflecting Bitcoin's price at the moment, quoting the report. For years now, as an investment house, we have been trying to join the digital currency sector. We launched a mutual fund that deals with the companies in the field, recognizing that their prices derive from changes in digital currencies, he shared. And since May, Israel has been working on the development of its central bank digital currency. Boo! We all know as the CBDCs, the digital shekel, through a new initiative called the Digital Shekel Challenge. Hilarious. The project invites participants to develop real-time payment systems using digital shekels, with the Bank of Israel providing a sandbox environment for the testing. One of the Israel's key goals with the CBDC project is to enhance competition with the local banks. While there is a public support for the project, concerns over privacy has been raised in the country. Yeah, here's the thing. Just say no to CBDCs. It's ultimately digital fiat, and it's programmable by the central bankers. Definitely not a good look. Trump promises to never allow CBDCs in the United States, but I believe it's a part of the agenda, and they're eventually going to do it, but you shall not participate in it, and that's why we have Bitcoin. Bitcoin's the antidote to the central bank digital currencies, and it's the polar opposite. Everything Bitcoin stands for, CBDCs does the opposite of. CBDCs is controlled by the state. Bitcoin separates money from the state. CBDCs, obviously, they're heavily controlled. They can be programmed by forces of evil and the lizard folk. Bitcoin, it's immutable. Nobody can change it. There's a finite limited supply. CBDC, digital shekel, digital whatever, dollars, etc., they can print infinity. You know what I mean? Just like the Ethereum max supply is the infinity sign. The same thing with the CBDCs. So just say no to CBDCs. Just say yes to the biddy. And that's it. And welcome everyone to the live stream. This is the Q&A segment of the podcast.